as you know, the fourth quarter numbers aren't out yet, but in the second and third quarter, Tether bought more gold than any central bank. Now, let that sink in. That's astonishing. And they're buying that gold primarily to back their gold stablecoin. Juan Santuri, the guy, the gentleman that's leading the drive, I think he's called the head of global projects for Tether. He thinks that the gold stablecoin will have as much growth over the next 5 years as the US stablecoin did in the last 5 years, right? And as you know, Tether is now, the seventh or eighth largest holder of US treasuries in the world. So this is not some random institution talking about growth in a gold-backed stablecoin. So to answer a question you haven't asked yet, but I don't think this is the top like 2011 or 1980 by any means. You can't have a top without public participation. And we just don't have that.
Well, Adrian, I need to have you on more often. I mean, you're doing my job for me, just setting up the questions and everything else. So, well, you've answered the question. Are we on it? Did we hit a top? I'm going to ask the converse now. Have we hit a bottom yet so far in your view?
That's all. No, I don't think so. If you like, I tried to put the decline we saw on Friday, and then we had a decline on Thursday, then Friday, of course, was the big day, and then again today. I tried to put it in some sort of context. If you look at Friday's decline, it was the sixth largest one-day decline since 1974. So meaningful, but not unprecedented. So I don't know which side of that argument you want to take, which it depends on whether you want to be positive or negative, but meaningful, but by no means unprecedented.
Adrian Day says this is not a speculative top like 1980 or 2011 because retail investors are not in the market yet. Tether bought more gold than any central bank in Q2 and Q3. Central banks reduced dollar reserves from 78% in 2000 to 47% in 2025. He expects gold to reach new highs in 2 to 3 months after bottoming around $4,500 to $4,550. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
And if you look at the gold price right now, where we're trading right now, we're trading where we were 10 days ago.
Yeah.
I mean, think about it. We are trading now where we were 10 days ago. If you put a piece of paper, if you looked at a monthly chart, all-time highs on Friday. All-time highs on Friday if you do a monthly chart, and just a tad below an all-time high if you do a weekly chart. So that sort of puts it in perspective. If you took a piece of paper and just put it over the last 2 weeks, you would say this is a great price. We're trading above the 50-day moving average, and therefore, obviously, the 100 and 200-day moving averages. So I think there's a better than average chance that we will come down some more. Now, I'm a historian by training. If you look at those previous large one-day declines, you find that gold was up within a month. Gold was trading at a higher price 60% of the time. And most of the occasions when it was not trading at a higher price were in 1980, which was a genuine, absolute peak. So that gives you something. It doesn't necessarily mean that gold will be trading at a higher price a month from now, but it certainly does not indicate that it won't be. So I suspect that we've got a little further to go down. 4,500 was always my target. 4,550 was my target for this decline. And that may be in the next few days. So my suspicion is that we're very close to that low, both in terms of price and in terms of time. and then we'll just sort of start to slowly grind back upwards again, perhaps hitting a new all-time high in 1 or 2 or 3 months. No, and I find that very, very positive. I mean, to me, first of all, there is no manic speculation among gold investors right now, such as we saw in 1980. The sentiment is not overwhelmingly bullish. People were not saying buy with both hands, back up the truck. And of course, the flows into the GDX, although for the last month, as of today, for the last month, they've been positive. Interestingly, huge inflows on Friday that I find positive. But they're certainly not overwhelming inflows, such as we saw in 2011, for example, where you saw inflows increasing from about April all the way through to the top in September. And the inflows were increasing all the way through, and they were more or less, steady inflows without any days of outflows. And the GDX actually trading at a premium for weeks on end, whereas today we're trading at a discount. So not only is the gold investor not manically speculatively inclined at this point, but the generalist investor, the generalist who would use the GDX typically, if they don't buy Newmont or Barrick, they would just buy the GDX. They are not in this market yet. They are not in this market. And when I talk to some friends who manage mutual funds, they say they've had pretty much consistent outflows all of January. Our experience is a little bit different, frankly, because Peter Schiff is such a good promoter and salesman. I manage a Peter Schiff fund. But most of the people I talk to say that they're still getting outflows in the funds, which is, again, not a manic, not a speculative top. Ongoing, consistent, ongoing, large purchases of gold from Tether. And the interesting thing about central banks and Tether in the current environment is both of them are fairly price agnostic.
Mm-hmm.
If Tether sells, 100 million gold stable coins, it has to buy 100 million ounces of gold to back it. And the price becomes irrelevant at that point. Obviously, they try to get a better price, which is why they've been storing gold. They've been buying gold in their own name to store it. I think this is the reason. So they have gold available if you get to a month or two where, they don't want to buy in the market. They've got the gold available to back it. But anyway, both of those are very significant and probably going to be ongoing buyers in scale, and both reasonably price agnostic.
Interesting. I didn't know about the Tether story. I'm looking it up now. They have approximately $24 billion worth of gold as of January of last month. And they're accumulating every month.
It's astonishing.
Yeah.
And most people do not know. Perhaps I shouldn't name the company, but one company CEO told me in December when he did his tour, he does a tour of New York and Boston every few months. And typically he has to fight to get meetings, and his day is half full and half empty. And the meetings are all with the gold fund manager. He said at his last meeting, something like 75% of those people said, hey, I asked so-and-so to join us. He manages our global value fund. He manages our US growth fund. Do you mind if he wanted to sit in? So that's a very, very significant, and I heard that from one or two other people. When I related the story, people said, oh, I've had that experience. So generalists of the funds and the institutions beginning to take notice, and perhaps at the beginning of December, they said, well, yeah, that was a fascinating story, but I'm not buying X, which is up 30% in the last 3 weeks. Now it's come down. Oh, now let's buy it. Maybe that's it. In year 2000, central banks, global central banks held 78% of their foreign reserves in the dollar. 78%. And they've been reducing it ever since. Last year, in August last year, 2025, it was something like 47%, 48%. So they've been reducing it for a long time. Now, there are some central banks that might say, well, we're under 50%, that's good enough. But if you're really concerned about concentration in a single asset, you're really concerned about the profligacy of the US government, and you're concerned about the weaponization of the US government, is 48% still too much? I would say yes. So I think this, and interestingly, of course, for countries with the highest gold weightings are the ones that are most friendly to the US, like Britain and Germany and Italy, but have less to be worried about. The ones with the lower percentages in gold are the ones that arguably have the most to be concerned about. So all of the drivers of gold for the last 3 years are still in place. We've still got, and the new buyer on the block, of course, is Tether. Tether, who started a gold stable coin. But if I may, I also think this could be, and this is speculation now, not what has happened and is likely to happen, but this is speculation. I also think that we're likely to start to see a move, whether it's partial move, 50% move, but a move out of crypto and Bitcoin and into gold. If you're a crypto bro that was in this 10 years ago, you've made a lot of money, you've had some of it taken back in the last 3 or 4 months. But Tether is like your hero, right? Tether is it's like if Saylor, what's his name, Michael Saylor, started to buy gold. You know, it gets your attention. It would be a bit like if Rick Rule and Peter Schiff both said we're going to switch from gold into Bitcoin. Well, a lot of gold people would pay attention to that. They might not all follow, but a lot will pay attention. And I think Tether, given its reputation in the crypto universe, has basically endorsed or given permission to crypto people to move into gold. So we could see that could be where the next wave of buying comes from. As you indicated, they had lagged dramatically the leverage we would expect. So it's difficult to complain when the GDX is up 144% in 1 year, but given what gold did, that is much less leverage than we would expect to see from the gold and silver stocks. And so perhaps it's logical that if you didn't get the leverage on the way up, you don't get it on the way down. That's one thing. The second thing, of course, is that the broader market was up, not dramatically, but up. And the gold and silver stocks are as likely to follow the broad market on a 1 or 2 day basis as they are the metals. You often have examples where the metals are flat or down, but the GDX is up because the broad market is up. I think it would be wrong to expect a V-shaped recovery. You don't often get V-shaped recoveries. But if you look back to October, which, remember, freaked everyone out, remember?
Yep.
October the 20th, people were panicking and everything else. But it bottomed within 10 days. I'm just eyeballing a graph. Don't quote me on 10, but looks like 10 days. And then just slowly ground back up, and we got to a new high, within 2 months. That's the sort of pattern I would expect this time, to be honest.
Now, what about silver? Do you anticipate silver bottoming out as well anytime soon?
Silver is far more difficult for me, to be honest. At $40, I had conviction and was right. At $95, I had conviction and was wrong. I thought, I didn't think we'd go over 100. I suspect that the decline in silver may take us down a little bit further and may last a little bit longer. But 6 months from now, I would expect it to be higher.